Welcome to TradeSKR. Today we're diving into one of the most misunderstood, most hyped, and most manipulated corners of the global commodities world, platinum group metals, specifically palladium and platinum. You've seen the headlines: shortages ahead, PGM markets on fire, supplies collapsing. But what's real, and what's just noise designed to move markets? If you're a trader, broker, investor, or corporate buyer, you need to know how to structure trades safely in these volatile metals. Because one wrong step in this field can cost millions or wipe out your reputation. I'm going to give you a professor-level walkthrough on how platinum and palladium trades really work. The supply chains, the verification steps, the escrow structures, and the traps that insiders never tell you about. And remember, at the end, I'll point you to our gated insider breakdown on TradeSKR.com, where I reveal the verified supply mechanics and the actual deal structures the professionals use. That's where the real secrets are shared. Let's start with the fundamentals. Supply concentration. For palladium, about 40% of global supply comes from Russia, specifically Norilsk nickel. Another 35 to 40% comes from South Africa. That means over 75% of palladium supply is locked into just two jurisdictions with high political and operational risk. For platinum, the picture is even more concentrated. Roughly 70% of output comes from South Africa and another 10% from Russia. When you hear shortage, remember, the geography of supply is what drives these narratives. If South African mining unions go on strike, or if Russian exports face sanctions, headlines scream shortage. But on the ground, metal stockpiles and recycled flows often balance out the panic. Demand drivers. Palladium is used heavily in catalytic converters for gasoline engines. The shift to EVs is supposed to reduce this demand, but in reality, emissions regulations in Asia are keeping palladium demand robust. Platinum, historically undervalued compared to gold and palladium, is gaining traction in hydrogen fuel cells and industrial catalysts. Market structure. The PGM market is thin compared to gold or silver. That means even small shifts in supply or demand can cause wild price swings. It also makes the market fertile ground for false offers, fake suppliers, and pump and dump narratives. Now let's look at the traps where traders get burned. Trap 1. Fake allocations and non-existent suppliers. You'll hear brokers say, "We have 2,000 kilos of palladium sponge ready in Zurich vaults, CIF terms, SKR available." 90% of these offers collapse once you ask for evidence. Why? Because they're recycled PDF offers with no title holder behind them. Trap 2. Over-reliance on SKRS. A safekeeping receipt is only as strong as the vault and the issuing entity. If it's issued by Brinks or Loomis, that's one thing. If it's a PDF from a warehouse in Dubai nobody's heard of, you're holding toilet paper. Trap 3. Price arbitrage myths. People chase discount palladium at 10 to 15% below market. Here's the truth. No real physical PGM ever trades at double-digit discounts in today's market. If you see those numbers, it's either recycled catalyst scrap being dressed up as sponge or a broker's fantasy. Trap 4. Escrow abuse. Escrow accounts are critical in high-value deals, but many so-called escrows are actually attorneys with no track record or offshore entities outside regulatory reach. That's how funds disappear. Now let's move into the actual mechanics of how professionals structure trades. Step 1. Verify the supply. Before anything else, you verify. Is the metal real? Is it available? And who legally owns it? This means title holder verification with documents directly from the refiner or vault, assay certificates from LBMA or NYMEX, recognized labs, and independent vault confirmations. Step 2. Match contract structure to supply. For platinum and palladium, trades are typically structured under spot contracts for smaller volumes, immediate settlement, long-term offtakes where miners and refiners sell forward to industrial buyers, and collateralized structures using PGMs as security for financing. Step 3. Escrow and payment mechanics. The safest deals use bank escrow with milestone releases. For example, buyer wires funds to escrow. Seller moves metal into a named vault under joint signature. Assay verification is completed, and escrow releases funds in tranches. This protects both sides. Anything outside this, like 100% upfront to seller's lawyer, is a red flag. Step 4. Compliance layers. That means full KYC and AML on both sides, sanctions, screening, especially with Russian origin, and regulatory filings for cross-border transport. Without this, your deal can be frozen mid-flight. Now let's move into some insider tips. First, only deal in refinery-recognized forms. PGMs are traded in sponge, ingot, or powder form, but only if produced and certified by LBMA or NYMEX accredited refiners. Scrap, catalytic converters, or processed concentrates are not tradable at scale without massive discounts. Second, understand recycling flows. One of the best-kept secrets in this industry is that 40% of palladium supply comes from recycling. That means a lot of supposed new supply is just scrap being re-refined. Smart traders position around recycling cycles, not just mine output. Third, don't ignore substitution trends. When palladium prices spiked above $2,500 an ounce, many automakers quietly shifted back to platinum in their catalytic converters. This substitution effect can flip demand balances in under a year. That's why professional traders watch automotive OEM filings as closely as mine reports. Fourth, secure logistics early. Even if you've got a valid contract, without a logistics chain, armored transport, customs clearance, vault intake, your deal collapses. Many junior brokers forget this step until it's too late. Let me give you a case study. A European buyer agreed to purchase 500 kilos of palladium sponge at a supposed 5% discount. Documents looked real, and SKR was presented. The buyer wired a 20% deposit to the seller's lawyer in Cyprus. The problem, the SKR was from a private vault, not on any LBMA list. The assay certificates were PDFs with no QR verification. Within 2 weeks, the seller vanished, the lawyer's account was emptied, and the buyer lost over $5 million. What should have been done? Demand vault confirmation from Brinks, Loomis, or Malka Ahmet. Require escrow through a top-tier bank, not a law firm. Verify certificates directly with the issuing lab. This is a perfect example of why PGM trades require ruthless discipline. So how do you actually survive and win in this industry? Rule 1, never skip direct verification. If you can't call the vault or refiner and confirm, walk away. Rule 2, use bank escrow only. Attorneys and private fiduciaries are not escrow agents. Rule 3, stick to industry pricing. Anything below 3% discount is questionable. Anything below 7% is fake. Rule 4, build relationships with recyclers and refiners, not just brokers. That's where the real flow of PGMs happens. Rule 5, stay ahead of regulatory shifts. With sanctions tightening on Russian exports, compliance gaps are the #1 reason trades collapse. Now, looking forward, platinum is set to see rising demand as fuel cell projects scale up in the hydrogen economy. That means long-term contracts will be more attractive than short-term spot buys. Palladium demand won't vanish overnight. Hybrid vehicles will keep catalytic demand strong through 2030. South African energy instability and Russian sanctions mean volatility is here to stay. That volatility is both the danger and the opportunity. Professional traders know you don't chase headlines, you structure safety nets. If today's breakdown gave you clarity, remember this. What I've shared here is just the surface layer. The real mechanics, how verified supply chains are secured, how escrow contracts are drafted, and how professionals quietly arbitrage PGM flows, that's inside our gated insider video on TradeSKR.com. So if you're serious about platinum and palladium trading in 2025, head over now. Watch the full insider breakdown, platinum and palladium. Verified supply and trade secrets. Only on TradeSKR.com. That's where we teach you the deal structures the professionals actually use. Thanks for watching, stay sharp, and I'll see you inside.